Guys, welcome back to our insurance weekly episodes. And today I would like us to look into comprehensive insurance covers. This in case of these are cases for the motor vehicles. Comprehensive insurance covers. One, about comprehensive insurance cover. Comprehensive insurance covers a wide range of risk. You get protected. These risks, they are spread. Actually, comprehensive is like it covers all in motor vehicle. And we are going to look into the factors to consider when getting a comprehensive insurance cover. We are going to look into the exclusions of this cover. We are going to look into the benefits of this cover. And then lastly, we look into how you purchase this comprehensive insurance cover. Number one, let's get to factors to consider when getting the comprehensive insurance cover. Number one, you're supposed to consider the cost. And the cost is you get to the cost once the vehicle has been done assessment, or rather what they call valuation. So the insurance cover which you can approach any insurance cover, because I believe like most like if not all of them, most of insurance companies in Kenya covers comprehensive, can get you a comprehensive insurance cover. So and some of these insurers are like UAP, or commonly known as Old Mutual. We have Kenya Alliance. We have another insurance. There are many because, but once you get a car or you need to change your cover, uh, I'm sure you'll be able to see all these companies and get to these companies. So, on number one, we say the cost of the vehicle, and this cost is gotten after valuation is done. Number two, we look at the age of the vehicle. The age of the vehicle also matters. Right now in Kenya, most of the insurance companies are giving comprehensive covers to vehicles aged between 0 to 15 years. If your vehicle is beyond 15 years, then you get challenges getting a comprehensive insurance cover. What happens when your vehicle gets beyond 15 years? What it does is like you have to start now looking for insurance companies to plead with them just to accept to offer you a comprehensive cover. Why is this so? It is because as the vehicle ages, the depreciation value also it's prone. I don't. It's prone to the spare parts also get worn out. You see, when the vehicle is new, and God forbid it gets involved in an accident, it's not like many items are going to get damaged. The airbag is functional, braking system, everything there, like the whole system, you'll be able to cruise well in case of an emergency. But as the vehicle ages, you see these things, they are getting worn out day by day, year by year. And I don't know why they choose from 0 to 15 years, but once it gets to 15 years, also you get problems with their insurance. So you have to look for an insurance which will accept your car or your vehicle which is beyond 15 years. The other one is the model of the car, the model of the vehicle. The model of the vehicle matters because their vehicles, like getting spare parts in Kenya, it's very hard. It's very hard for you to purchase a spare part. So insurers will determine the how much is going to charge you in case you need a comprehensive cover. And let's say, for example, a BMW, or rather these huge German machines. Once you got involved in an accident, and then they need to import a certain spare part, they obviously increase the cost of the premium, or rather the cost of the insurance cover, because just in case anything happens, it will also cost the insurance. A good example of the model of the car as a factor in comprehensive insurance cover is recently there has been a surge of the new Suzuki Altos that is being mostly used by Uber guys. There is a time ilifika and then insurers wakasema like some of them actually say they are not going to insure the Suzuki Altos. Why? Because the Suzuki Altos imekuwa mingi, you are going for insurance cover, comprehensive insurance cover. In case of an accident and this vehicle is a write-off, they need to buy one. They are not processed locally. Second, if it's not a written off, a spare part is needed. This is a new vehicle in the market. This is a new vehicle in the industry. And so, in case of an accident, where are they going to get a spare part? You know, to import a spare part, it could even be close to the cost of that Suzuki Alto. Something else for the model of the car, I know some of the insurances that insurance companies that don't insure products because they say products are prone to accidents because of the how they are driven. Another one is Subaru. They are guys, Subaru guys, wengi wao wana, for them to get a comprehensive insurance cover, then they have like to prove how they are going to utilize or to use their car, because kuna time Subaru ilikuwa I don't know the word to use, but there was a time Subaru and insurance were not related. Then we talked about the model, we talked about the age of the car, and then now again let us look at another thing the insurance will look is the year of manufacturing. We call it YOM, the year of manufacturing in insurance. I don't know why they look at the year of the insurance, but also a determinant when they are going to issue you with a comprehensive insurance cover. So that is factors insurance consider when they are giving you the comprehensive insurance cover. So let us look also at what is covered in comprehensive insurance cover. Accidental damage is covered, whether you are blamed in an accident or not. Theft is covered in case your vehicle has been stolen. Something else is an act. In insurance, we call it general act of God. Act of God is like in case of floods, your car was swept away by floods. We also storms. Tree has fallen, a branch of tree has fallen and fallen on your car. So insurance will have to cover for this. But as I said in our first episode, before insurance compensates you in case of theft, accident, or anything else that was covered, that is covered under the insurance that you have, they send an investigator who will come and look at the circumstances of these things, circumstances of theft, whether it was intentional, circumstances of accident, whether it was man-made, or this branch of a tree has fallen, whether it's you who you did it intentionally. So they send an investigator to investigate the circumstance of this accident or theft. Then those are the factors that, or rather, this is some of the things that are. These are some of the things that we say are covered in comprehensive insurance cover. Then let us look at the disadvantages of comprehensive insurance cover. Disadvantages of insurance cover is the cost. It is very expensive because model of your car, age of your car, these things, it's how I pay for my comprehensive insurance cover. It's not how much you're going to pay for the insurance, because the models are different, the valuation reports are different. Then we have like the advantages now. Okay, there was another disadvantage that I did not highlight, but it's very important: exclusion. Exclusion, you come like you have paid for a comprehensive insurance cover, yet windscreen is not covered. Yet you find like cassette, your radio system is not covered. So you have to look at the policy document, how much or what is there that is covered or not covered. Let us look at the advantages, because we have looked at the disadvantages. Number one, there are comprehensive insurance covers that covers your windscreen. The insurance comprehensive that covers the radio cassette. There insurance covers that you will not lose your car in case of an accident. That's also an advantage. How? Very fast, because of the time. How do you acquire a comprehensive insurance cover? This is how you acquire a comprehensive insurance cover. Number one, you get a car. Whether you get a new car. If you have a car, you want to change and insure, this is what you do. You visit an insurance company, you get a proposal form, you propose, and then a valuer or assessor is sent to assess your car, to value your vehicle. If he or she is not sent, then you're asked to take your vehicle to a certain value, to the insurance valuation yard or assessment yard. What happens? They assess your car, they give it the value, and then the insurance company will tell you the value of this car, this is the percentage, this is the amount that you're going to pay for this cover. So that is for someone who already has a car. There are people who are going to buy cars from the yard. You can connect with the person who is selling you the vehicle at the yard in Mombasa, along Gong Road, along Kiambu Road. These are places where people are buying vehicles from the yard. So you can arrange with the person who is selling you the car, and then they arrange for you an insurance. If you don't arrange with them and you have your insurance person, first they tell you that you give them a rough figure, like this is the rough value of this car. So they tell you that this is how much we can insure that car. So what they do, you pay a partial payment of the rough figure that you gave, and then you take your car from the yard, bring it to the assessment, or an assessor or a valuer comes to you and then does the valuation. If the car is equal to the partial contribution of the premium that you paid, you don't pay extra. If the value of the car is more than the partial amount that you had paid earlier, then you have to top up on what you had paid. The idea of this is for you not to go to Mombasa, buy a car, and then come all the way to Nairobi, drive all the way to Nairobi without an insurance cover. You have first to partially pay, then come, an assessment is done, and then you top up on what you had already paid. Or if it's equal to the value of the car, then you just get a whole year certificate, or rather the insurance. So once you pay partial, what you get is like a one month insurance cover. So ideally, that is what happens with comprehensive insurance cover. So join me next week Tuesday, same time, for us to look into third party insurance cover and why it's commonly used by vehicles which have already aged. Thank you very much, and God bless you until next week on Tuesday. Thank you.